What if everything you have been told about XRP price is completely wrong and the real opportunity is hidden in plain sight while most people are distracted by unrealistic targets and hype driven predictions? Because right now there is a silent shift happening in the market that could change who actually makes money and who stays stuck waiting for numbers that may never come. And the truth is simple but uncomfortable, because the average person does not become rich by chasing extreme price targets. They become rich by understanding timing, positioning, and realistic growth before the crowd even realizes what is happening. Now, here is where things start to get interesting, because when people talk about XRP, they usually fall into two extreme groups, where one group believes XRP will explode to unbelievable numbers overnight, and the other group thinks it will never move significantly. And both sides are missing the real point entirely, because the market does not reward emotional thinking. It rewards calculated decisions based on patterns, behavior, and adoption trends that most people ignore. The idea that everyone is wrong about XRP price does not mean the asset has no future, but it means that the expectations surrounding it are often disconnected from reality. And this creates a dangerous situation where investors either overestimate what will happen quickly or underestimate what can happen over time. And both approaches lead to poor decisions that limit real profit potential. When you look closely at how markets actually work, you start to notice that massive wealth is rarely created from one sudden move, but instead from consistent positioning before major adoption phases begin. And this is where XRP becomes very interesting, because its real value is not just in price speculation, but in its use case and how it fits into the global financial system that is slowly evolving. Most people are focused only on price charts and predictions, but they are ignoring the bigger picture, which is how financial systems are changing, how cross border payments are being optimized, and how digital assets are slowly becoming part of that system. And XRP is positioned directly in that conversation, which means its growth may not look like what people expect, but that does not mean it will not happen. The phrase average Joe rich is powerful here, because it highlights something most people misunderstand, which is that becoming wealthy from crypto does not require extreme luck or impossible price targets, but instead requires understanding realistic scenarios, patience, and strategic accumulation over time. And this is where many XRP holders are either making a smart move or setting themselves up for disappointment, depending on how they approach it. If someone believes XRP will instantly reach extremely high prices without considering market structure, liquidity, and global adoption timelines, they may end up holding without a clear plan. But if someone understands that even moderate price movements combined with smart positioning can create significant gains, then the entire strategy changes, and suddenly the opportunity becomes much more realistic and achievable. Another important factor that people ignore is market psychology, because the majority always reacts late, and by the time a big move becomes obvious, most of the early opportunity is already gone, which is why understanding current sentiment is more important than following hype. And right now, the sentiment around XRP is mixed, uncertain, and often driven by confusion. which historically creates conditions where smart investors quietly position themselves. There is also a major difference between short term excitement and long term value. And many people confuse the two because they expect immediate results in a market that often rewards patience. And this is where XRP's journey becomes more complex because its growth is tied not just to retail interest, but also to institutional involvement and real world use cases that take time to develop and expand. At the same time, ignoring XRP completely could also be a mistake because, while some expectations are unrealistic, the underlying technology and its potential role in financial systems cannot be dismissed. And this creates a unique situation where both extreme optimism and extreme skepticism fail to capture the full picture, leaving a middle ground that very few people are actually exploring. So the real question is not whether XRP will reach extreme price levels overnight, but whether people are positioning themselves correctly for the type of growth that is actually possible, because that is where the difference between average outcomes and life changing results begins. And understanding this shift in thinking is the first step towards seeing the opportunity that most people are currently missing. Now, when we move deeper into this idea that most people are wrong about XRP price, it becomes very important to understand where these wrong expectations actually come from, because they are not random. They are built from social media hype, selective information, and a strong desire to see fast results. And this combination creates a mindset where people stop analyzing reality and start believing in outcomes that are not supported by how markets usually behave. One of the biggest mistakes people make is comparing XRP to assets like Bitcoin without understanding the difference in how these assets move and why they move. Because Bitcoin grew in an environment where it had first mover advantage, strong, narrative support, and a completely different market structure at the time, while XRP is developing in a more mature and competitive environment where adoption depends on real world integration rather than just speculation. This difference changes everything because XRP's growth is not just about retail investors buying and holding, but about whether financial institutions, payment providers, and global systems actually use it in meaningful ways. And this kind of adoption takes time, testing, partnerships, and regulatory clarity, which means price movement may feel slower than what people expect from hype driven assets. At the same time, there is also a misunderstanding about supply and price because many people believe that a large supply automatically limits price growth in a simple way. But the reality is more complex because price is influenced by demand, liquidity, utility, and how much of that supply is actively circulating in the market. And ignoring these factors leads to oversimplified conclusions that do not reflect real market behavior. Another major factor that confuses people is the role of Ripple Labs, because many investors think XRP price depends entirely on what the company does, while others believe XRP is completely independent. And the truth lies somewhere in between, where Ripple's partnerships, technology, and business strategies can influence perception and adoption, but market dynamics still play a huge role in determining price movement. This creates a situation where news, announcements, and partnerships can cause short term excitement, but long-term price growth still depends on sustained demand and real usage. And this is why some people get frustrated when XRP does not immediately react to positive news, because they expect instant results instead of understanding the gradual nature of adoption. There is also the issue of unrealistic price targets, which often spread quickly because they are exciting and easy to believe, especially when they promise life changing wealth from small investments. And while it is true that crypto has created massive gains in the past, those outcomes are rare and usually happen under very specific conditions that are not always present in every market cycle. When people focus only on extreme targets, they ignore realistic opportunities, and this is where the concept of the average Joe, becomes important again, because someone who understands smaller, consistent gains and manages risk properly can still achieve significant financial improvement without relying on unlikely scenarios. For example, if XRP experiences steady growth over time instead of explosive overnight moves, an investor who accumulates early and manages their position wisely can still see strong returns. But this requires patience and discipline, which are often missing when people are influenced by constant hype and fear of missing out. Market cycles also play a huge role in shaping expectations, because crypto markets move in phases where excitement builds, peaks, and then cools down. And during these cycles, narratives change quickly, causing people to constantly adjust their beliefs without fully understanding what is actually happening beneath the surface. Right now, many XRP discussions, are driven by anticipation rather than confirmed outcomes, which creates uncertainty. And while uncertainty can feel uncomfortable, it is also where opportunities often exist, because prices tend to move before the majority becomes confident, not after. Another key point that people overlook is timing, because even if someone is correct about XRP's long term potential, entering the market at the wrong time or holding without a strategy can still lead to disappointing results. And this is why understanding entry points, risk management, and realistic expectations is just as important as believing in the asset itself. There is also a psychological trap where people hold on to extreme beliefs because they want to justify their decisions, and this can prevent them from adapting to new information, which is dangerous in a fast changing market like crypto, where flexibility and awareness are critical for success. So when we say that everyone is wrong about XRP price, it does not mean there is no opportunity, but it means that most people are approaching it with the wrong mindset, either expecting too much too quickly or ignoring the potential completely. And both of these extremes create blind spots that limit real understanding. The smarter approach, it lies somewhere in the middle, where investors recognize both the limitations and the possibilities. And instead of chasing unrealistic outcomes, they focus on positioning themselves in a way that allows them to benefit from realistic growth while managing risk effectively. And once you start thinking in this way, the entire perspective changes, because instead of asking whether XRP will reach an extreme number, you start asking how it can realistically grow, what factors will drive that growth, and how you can align your strategy with those factors. And that is where the real advantage begins to form. As we move further into this discussion, it becomes clear that the real misunderstanding about XRP price is not just about numbers, but about how people interpret the entire market structure, because most investors are looking at the surface while why the real movement is happening underneath, driven by factors that are not always visible in daily price action. And this creates a gap between perception and reality that only a small percentage of people truly recognize. One of the most important things to understand is liquidity, because liquidity is what allows large amounts of money to move in and out of an asset without causing extreme price changes. And this is especially important for an asset like XRP that is often discussed in the context of global payments. Because if it is to play a role in large scale financial systems, it must handle high liquidity efficiently. And this requirement alone changes how price behaves compared to smaller, low liquidity cryptocurrencies. When liquidity increases, price movements can become more stable and less explosive, which might seem disappointing to those expecting sudden massive gains. But in reality, this stability is exactly what institutions look for, because they need reliability rather than extreme volatility. And this creates a different kind of growth pattern that is slower but potentially more sustainable over time. Another key factor that many people ignore is regulation, because regulation plays a major role in how digital assets are adopted globally. And XRP has been deeply connected to regulatory discussions for years, especially due to its association with Ripple Labs. And while some see regulation as a barrier, others understand that clarity can actually unlock new opportunities by making institutions more comfortable with using the asset. The relationship between regulation and price is not always immediate, because even positive developments may take time to reflect in market value. But over the long term, clear rules can reduce uncertainty and encourage larger players to participate, which can gradually increase demand and influence price in a more stable way. At the same time, there is a misunderstanding about how institutional money enters the market, because many people imagine a sudden flood of capital that instantly drives prices up. But in reality, institutions move carefully, testing systems, analyzing risks, and entering positions over time rather than all at once. And this slow entry process often goes unnoticed by retail investors who are expecting dramatic moves. This is where patience becomes one of the most valuable qualities, because those who understand that accumulation phases can last longer than expected are more likely to stay positioned while others lose interest. And historically, these quiet periods are often followed by stronger moves once momentum begins to build. There is also the factor of global financial evolution, because the traditional banking system is gradually changing and cross border payments are becoming faster and more efficient. And XRP is frequently mentioned in this context because of its potential to reduce costs and increase speed. But again, this transformation does not happen overnight, and expecting immediate price reflection from long term infrastructure changes is a common mistake. Another important element is market competition, because XRP is not the only digital asset aiming to solve, payment related problems. And this means its growth depends not only on its own development, but also on how it performs compared to other technologies. And this covers a competitive environment, adds another layer of complexity that many simple price predictions fail to consider. Despite all these factors, one thing remains consistent, which is that the market rewards those who are able to stay rational while others become emotional. And this is where many investors struggle, because it is easy to get excited during hype phases and discouraged during quiet periods. But real success often comes from maintaining a balanced perspective throughout both phases. The idea of the average Joe becoming rich through XRP is not impossible, but it requires a shift in thinking, because instead of chasing unrealistic price targets, the focus must be on understanding how value is created over time, and how positioning early in a developing trend can lead to meaningful gains, even if those gains do not come from extreme price explosions. For example, if XRP gradually increases in value due to growing adoption and improved market conditions, someone who has accumulated consistently and managed their expectations can still see strong returns. And this approach is far more reliable than waiting for a single event to create instant wealth. There is also a deeper psychological layer where people tend to follow the crowd because it feels safer. But in financial markets, following the majority often leads to average or below average results, because by the time something becomes widely accepted, much of the opportunity is already passed. And this is why independent thinking is so important. At this stage, the biggest advantage comes from clarity, because once you remove unrealistic expectations and focus on how the market actually operates, you begin to see patterns that others miss. And this allows you to make decisions based on logic rather than emotion, which is a key difference between those who succeed and those who struggle. So, the real takeaway here is not that XRP cannot grow or that it will not create opportunities, but that the path to those opportunities is very different from what most people expect. And understanding this difference is what separates informed investors from those who are simply reacting to noise. As we continue deeper into this discussion, the focus now shifts toward what realistic XRP growth could actually look like in a real market environment. Because once you remove the hype and extreme expectations, you are left with a much more grounded picture of how value typically builds over time. And this is where many investors finally begin to understand the difference between speculation and long term positioning. The first thing to understand is that price growth in assets like XRP does not happen in a straight line, and it does not happen only because of one single event, but instead it is the result of multiple factors working together over time, including adoption trends, liquidity changes, investor sentiment, and broader market cycles, all interacting in a way that slowly shapes the overall direction. When people expect extremely fast price jumps, they often overlook the reality that large financial movements require large amounts of capital, and that capital does not enter the market instantly, because it moves through stages of testing, confidence building, and gradual allocation, which means even strong bullish phases can still take time to fully develop before they are reflected in price. Another important point is that realistic growth is often misunderstood as small, when in fact, even moderate percentage increases can create significant wealth if someone is positioned correctly and early enough. And this is where the concept of average Joe Rich becomes more practical, because wealth is not always about extreme price targets, but about consistent growth combined with proper timing and patience. At the same time, it is important to understand that XRP's role in global payments is still evolving. And while it is often discussed in connection with fast cross-border transactions and financial infrastructure, these systems take time to integrate into real world usage And that means price reflection is often delayed compared to narrative excitement. The involvement of Ripple Labs continues to play a role in shaping expectations because partnerships, collaborations, and technological development often generate short term attention, but long term value depends on how widely the technology is actually used in production systems rather than just announced or tested environments. This is where many investors become confused because they expect news to immediately translate into price movement. But in reality, markets often move in anticipation of future outcomes, not immediate confirmations, which means by the time something becomes widely recognized, much of the price impact may already be partially absorbed. There is also the concept of market maturity, which is very important when discussing realistic growth because as markets develop, they tend to become more efficient, and efficiency often reduces extreme volatility, meaning that while growth can still occur, it may appear more gradual compared to early stage explosive movements seen in newer or less developed assets. Another key factor is that institutional participation changes the way price behaves because institutions do not chase hype in the same way retail investors do. Instead, they focus on long-term value, risk management, and structured entry points. And this creates accumulation phases that are often invisible to the broader public until much later. In this environment, patience becomes not just a virtue, but a strategy because those who can remain steady during slow or uncertain phases are often the ones who benefit when momentum eventually builds, while those who react emotionally tend to enter late or exit too early. It is also important to highlight that realistic growth does not mean guaranteed growth because no market is without risk. And XRP is still subject to global economic conditions, regulatory developments, and competitive pressures from other payment focused technologies, all of which can influence its trajectory in different ways. However, despite these uncertainties, the broader idea remains that value is usually created gradually, not instantly. And those who understand this principle are better equipped to handle both optimism and doubt without making impulsive decisions that can harm long term results. Another overlooked aspect is that expectations themselves can shape behavior because when investors expect unrealistic outcomes, they often ignore rational exit strategies or risk management, while those who focus on realistic growth are more likely to build structured plans that protect their capital while allowing for potential upside. So when we talk about XRP and its future price potential, the real question is not whether it will reach extreme numbers quickly, but whether it can continue to develop within the global financial ecosystem in a way that supports steady demand over time. And that type of growth, while less dramatic, is often more sustainable. This is where the mindset shift becomes critical because once you move away from emotional predictions and towards structured thinking, you begin to see that success in markets is not about guessing the highest possible price, but about understanding how trends develop and positioning yourself accordingly.